Hey guys, since we have quite a few people in here already, go ahead and let me know if you can hear me on the microphone okay. We had to reset some of this equipment again, so let me know if levels sound okay. Music might be a little loud, but at least let me know if you can hear my voice okay. And we'll get started in a little less than 5 minutes here. All right, we got about a minute here. Let's get the music under control. We'll do a little pre-stream banter here, as I did get some notice that some of you that can view this pretty much instantaneously were having some trouble hearing. So go ahead and let me know if you can hear me okay. It looks as though those of you in the YouTube live stream and Twitch live streams can hear me just fine. Okay, so it seems like it was a client-side issue, or is it a Parsec issue? Because there is some people here that are remoting in through Parsec to view this, as they cannot view it from their work networks. Okay, Cool. So that's sorted out. Excellent. Let me go ahead and pause the music on this side. I know I took it down on the stream there. We're going to roll right into this. Hello and welcome to Landy's Crypto Corner for a Market Madness Technical Analysis Wednesday live stream here. I am your host, Landy, as always, and we are going to start by looking at Bitcoin. Now, typically, I save some of the longer form analysis for either the beginning of the week on a Monday or Friday. Of course, the beginning of the week was a holiday. So I hope everyone had a wonderful Christmas or a happy holiday if you don't celebrate. And if you're on vacation, I hope you're enjoying it. And for those of you that are not on vacation, I'm sorry. Hopefully, you'll get a little bit of time after New Year's to continue the celebration after a short stint back at work there. All right, we're going to start by looking at Bitcoin on some of the daily time frames. We will then move over and start looking at some of the longer term time frames as we come into the monthly, the quarterly, the 6 month, the yearly close, all of the different closes, right? So we have a lot going on this week in terms of major time frame closes and things to look at. And we'll also, evaluate where things stand right now and what to look for coming into the first quarter of next year. So I'm going to turn my monitor mic speaker up here just a moment to make sure I'm getting through okay. Yep. All right. Sorry if that if you got some feedback through the microphone there. So yeah, let's take a look at Bitcoin on the daily. We're going to take a few different views of Bitcoin on the daily here. We can see that we're on the Bitcoin in 60 seconds charts. If you are on following me on YouTube or on x.com, formerly Twitter, you'll see this chart in the, of course, Bitcoin in 60 seconds shorts videos. On YouTube, you can find those under the shorts tab. There hasn't been one in a while, as Bitcoin has pretty much been hanging out in the range that we described in those videos. And then, of course, we've been following that up with these live streams. But we're going to start with the Bitcoin in 60 seconds chart here. We can see that we have Bollinger Band compression on the daily. Bitcoin is just kind of going sideways after expansion up through the weekly, nearly to that monthly target at 45.5, coming in just shy at $45,000 even. We had a move back down to the basis band of the Bollinger Bands through these two weeklies. This is a big area. So this 43.2 to 41.8 weekly closing structure here that Bitcoin is kind of trading in and around is going to be kind of the deciding factor for Bitcoin's immediate future. If Bitcoin does lose this downside weekly here and the lower first on a close, that would be at 41.8. Then I would be looking at that lower second standard deviation as the area that's going to kind of determine what's going to happen for price in the coming weeks here. And that would be if it either acts as a reversal area around these prior lows. Of course, this one low coming in there at 40,150. And if that holds up, then we'd be looking for this weekly area to get regained between 41.8 and 43.2. If that area was lost along with the low side structure here, we would be looking down to this next weekly here at $39,000 and for a test of the monthly just below at around 38.5. If that didn't hold up, we'd be looking back to this accumulation structure right here at that monthly at 38.5. We have a couple of rejections there. If it was to trade down below there and close below there, I would be looking to the 37.7 weekly, and this is a bigger zone down here to the next weekly at 36.2 to 3. Now, of course, there is areas of interest under there just below at that $35,000 monthly to this weekly that got tagged nearly to the penny at 750. Now, to the upside, if we did see this 43.2 taken out on a close on the daily, I would be looking to that upper first, right around this lower high structure here, anywhere between, what is it at, 43.8 to around 44,000. I believe the wick high is coming in at that actually hit our target from the Bitcoin in 60 seconds video at around 44, 4 to 5. Or I believe the target was between 44,000 and 44.5. So if we did see Bitcoin trading above there and pushing that upper second standard deviation, of course, it would be trading back around the highs here. And I would be looking for that high to possibly get ran at 45 above there. We're looking to the monthly at 45.5 above there. The next monthly at 47,000 to the monthly swing high above it. That big bear market lower high on the monthly that really solidified the bias that things were going to test the current lows at the time in the $30,000 range, $28,000 to $30,000 from 2021, and that was at 48,240. And I would give it some room to around 48.5 if Bitcoin does start to work its way up there. There is targets up above there as well. If we did start to see an impulsive structure form above that area, then we essentially are looking for some pretty deep targets. But this is kind of where Bitcoin stands on the daily. Nothing too crazy. If we take a look at momentum, we can see that momentum is shifted to the downside here. And we can see that the momentum pivot is at $44,000. We also see that we are getting a bit of a cool down in BBWP, or price volatility, or volatility of the Bollinger Bands. That can obviously be seen by the compression of the Bollinger Bands and setting up for a range. To make things really simple, if Bitcoin starts closing above the current upper second standard deviation area, which is coming in at 44,700 to 44,800, roughly around the current highs, I would say that if Bitcoin starts closing above this high at 44.5, we're likely looking at that area getting run. If it does start to close above there, we would see re-expansion up into those monthlies above. If we do start to see this weekly area, and especially that lower first getting closed below, keep a very close eye on that lower second, which is coming in at 41.1. Below there, the wicks. If 40K is dropped, then we can start looking at that weekly at 39 to that monthly at 38.5 and evaluate from there if it either holds up or breaks down. And just take it level by level. Pretty simple stuff, actually. If we look at RSI, which is not on this chart here, and we're gonna talk about the EMA structure here, but if we look at RSI, it is hanging out in the strong half of RSI here, and we can get some bias as to where price may end up based on the RSI read. So if it does head up to this 12-period simple moving average, we would be looking at a Bitcoin price of somewhere around 43,800. If we did see things head down towards the midline or the 50 read on RSI, we're looking at somewhere around $42,000 again, which is the current lows of the past few days, around that 41.8 weekly and slightly below. And if it did head down to the bearish control zone or the edge of the bearish control zone here, we can see that that is at that 38.8. So that's, somewhere around that weekly monthly structure between 38.5 and the weekly at $39,000. So that's where, if things did start to head down towards the bearish control zone, I would be looking for it to possibly dip further if those areas, of course, break down. Mainly because you want to see bullish divergence starting to build on the current move down. Now, we would get residual, more than likely get residual bullish drives of momentum, that being hidden bull divs. Now, that does not necessarily mean that they're going to be very powerful. You want to see in-trend bullish divergence at that point. And this would, of course, be the in-trend right here of the current structural move on RSI. And I'd be probably looking a little bit further down. Now, if it does head up and get above the SMA at around that 43.8, I would be looking to the bullish control zone, or the edge of the bullish control zone here. And that is around 44,650. So right around that upper second standard deviation on the daily. And above there, of course, we have the extreme read on RSI up here at about an 80, or a critical read as it's noted in this particular RSI indicator. And that's at almost $55,000. So keep that in mind. That would be your impulsive structure that took out the monthlies above at 45.5, 47, and the wick high at 48,240. So that is something to pay attention to. There is, pattern traders are going to be drawing patterns all over RSI and price action here, and momentum experts are going to be calling for, oh my God, it's fallen off a cliff, everything's going to collapse. Well, that's one of the reasons why I have this chart up here. I want you to note that the Bollinger Bands are represented on the right side here. Thank you, JRTA. We still have to integrate this into the Landy Bands, but it will be integrated soon. I actually took a little bit of time to work on it in the past week or so, but I'm working out some bugs at the moment. But this, just so you know, if you have the Landy Bands, I want to show you that it's nothing more than a Bollinger Band level for a specific time period. So you'll see that the Bollinger Bands just line up with these levels here. Upper first, second, third, the basis, and then lower first, second, and third. I just have them off so that we can reference both the Bollinger Bands and some EMAs here. So we've got our Bollinger Band levels and we've got our EMAs. We've got Bitcoin pulling back to the 21 after closing below the 9 EMA here. Did try to swing back above it, came back down and wicked below the 21 EMA, and now sat on it and bounced up to try and get above that 9 EMA. If we do happen to see a 9 EMA cross, that's really only going to happen if we start seeing Bitcoin close below the 21 and start heading towards these lows, which we can see the 50 SMA and the 55 EMA are coming up to kind of bracket the bottom side of these lows right around the daily lower third standard deviation. So my opinion as it stands right now is if Bitcoin were to head down further and start to test those lows around $40,000, $41,000 area, it's very, very likely that we would see a strong bounce. That does not mean that that bounce is going to lead to a trend reversal. All right. That doesn't mean that a downtrend doesn't resume, but it is a very bouncy area because it is an extreme on the Bollinger Bands and it's a major EMA level. Now you can also throw fibs on here, and there is a major fib level there as well. It just depends on which fibs you're drawing. We can go through and maybe have fun with fibs later, because as somebody tweeted to Fiboswani, and I saw, and then a few of you guys pointed out, fibs just don't work. They're just fake made up numbers, right? Yeah, okay. Silly. I also want to note here that I have the 9 weekly EMA down here as well, kind of just marked off. This is manually marked off. It's not exact, but it's somewhere around that 39.5 level where the 55 EMA currently is. Now, of course, if we were to scroll down a little bit further, you can see that we have the 200s, which is, kind of your trend. This is going to make your trend and break your trend, right? From an EMA or MA perspective, you got the 200 EMA above the 200 SMA here, with the 200 EMA coming in at $33,000 and the 200 SMA coming in at 31,600. So quite a lot of downside areas of interest, and outside of just those levels that we spoke about earlier, being the horizontal support and resistance zones from the Bitcoin in 60 seconds chart. All kinds of support below price. Then we look at, okay, from a volatility standpoint, it's bracketing in a range right now as it consolidates, and there's downside EMAs at the bottom side of those. So at minimum, we're looking at any kind of a downside move being picked up at least initially, and then we come back to it later. Could provide a reversal as well off of some major EMAs for the daily. And then, of course, there's the weekly. The weekly's 9 EMA is what's down here. For some context, let's go to the weekly and take a look, because this is super important. I'm getting a lot of bearish sentiment. I'm even getting, people that don't know me messaging me on places like X. They're not even followers. I don't know. I thought I had it set to followers only, but you can see that the 9 EMA is right there at the bottom side of the daily Bollinger Bands here. So this is still the daily Bollinger Band levels there. And the weekly 9 EMA is right there at that 39, it's actually at 39,600. So, I have this just as a rough place to put it. I mean, we could actually enter the number exactly for reference later. Let's go ahead to coordinates, and we can do, what is it? It's 39,635. So just so we got that there. And now it's lined up. All right, so It will oscillate a few pennies here and there as Bitcoin trades. I also want to note the structure here on the weekly. We can see that it is still looking very good in terms of structure. There is no high painted. The only way we're going to see a high painted on a closing structure here is on any closes below this open from the beginning of December. And that open came in at 39,984. So again, just like we talked about earlier, the $40,000 wick low area, the 40,150 here on Coinbase. So lose that $40,000 area, we're probably looking at 39 to that monthly at 38.5 and then probably lower. Specifically, from an EMA perspective, probably looking somewhere around that 21, wherever that happens to come in. And currently, it's coming in at $35,000, which again is a major monthly closing swing level. So from 2020, excuse me, 2021. So getting a lot of confluences here, and we should not fade the confluence in favor of bias. So if it is to head down, areas are pretty clear. It's going to fall all on those major horizontal supports and resistances is basically what this is telling us. Now, if we go over to the weekly's Bollinger Bands here and compare that to the dailies, we'll get rid of the moving averages here in the Landy Bands, and we can see that Bitcoin is still well above that upper first standard deviation. And note that the upper first standard deviation is even below the current daily lower third standard deviation of the Bollinger Bands. Now, that's not to say that if we get expansion down and start to break through horizontal support and resistance, that it cannot fall further. In fact, below the upper first, you can see the basis is working its way into the $33,000 level. The lower first is now right at the prior weekly low at 26,500. So this is the zone that Bitcoin, I believe, will play in, and that's somewhere between around the upper 39s to $40,000 and that upper second, which is coming in just above the highs and into the thick of the monthlies up there at around 46,400. So, of course, if we start to see this break out above the wick high there at 45K and start pushing that upper second standard deviation, I'd be looking for some of those deeper targets to get hit. And if we start to see it closing above that weekly, well, game on. We're probably looking somewhere in the $50,000 area to $55,000 area. So very, very, very clear what is going on here. Yes, momentum has shifted for the time being to the downside for a couple weeks here. And of course, this is an extreme read on Stoke. This is a combination of two Stokes because I forgot to turn off the advanced Stoke. That is a paid indicator that you can get from app.chronotrading.net, I believe. And KVDB is the author of that particular script. But there's also free Stokes that also have pivots. I like that particular indicator because it's got extras in it that I don't often talk about with you guys, like DMI and ADX. I don't think it's really needed. But it is insightful for me when I go to explain some of these things to you. So in this case, close above around 43.8 would turn Stoke back to the upside here as it stands right now. Trading a couple $100 below there. My apologies for clearing my throat into your ears. We do not have any in-trend bearish divergence as it stands right now for this particular move. Yes, there's longer-term bearish divergences here. Those are hidden bear divs. Not concerned about those. The local in-trend bearish divergence will only form once we see two tops and around this area or higher, and we are not seeing that just yet. So what this tells me is bias is still heavily angled to the upside here in terms of traders in the market, and for myself in terms of my analysis. Okay, don't talk for a couple weeks or about a week and a half, and I'm already losing my voice. Give me 1 second, take a sip of water here, and we're going to go up the time frames. All right. Let's compare this to where, we can compare this to where the 2 week is. Bitcoin continues to close. I'm sorry. I forgot something here because I did want to show you this in the weekly. Let's go back. You can see that the weekly is in cool down, but we're not in compression. So price volatility is cooling down while we're seeing expansion of the Bollinger Bands, which means that we're likely to see that lower upper first hold on the low side to the upper second. And the only way that we're going to get very fast cool down is if we see a mean reversion or Bitcoin start to close below that upper first and really head into the basis band as the basis band is moving up. Then you'll see a very quick compression. As it stands right now, this is sideways and up consolidation with a little bit of cool down and price volatility as Bitcoin goes sideways. And if we start to see this pick back up from where it is, as long as it's above the upper first, if we see BBWP turn back up, that means that we are headed towards that upper second. Now, I do want to note that we do have a fairly weak signal. We've talked about this previously. We have the BBWP under the moving average. We have the moving average with a slight negative slope. I want to see it with one more closure get a negative slope, which means that if we did see price volatility pick up again, that means one of two things. If we see price volatility of BBWP pick up, that means that we are trading below the basis band towards the lower first, or we are trading back to the upper second. That's the only two scenarios from here where you are going to see that. If we see the upper first lost and price head back towards the basis band, volatility will continue to cool down. If we see volatility start to pick back up, then the only way it's going to happen from the current position is if Bitcoin goes up towards that upper second and or breaks down below the basis, starts heading towards the lower first. And in this case, probably even below the lower first to the lower second. So as it stands, there's only one way that I'm seeing volatility re-expand, and that would be to the upside at the moment. And because the moving average is curled over, I would caution that any move up from here, no matter how violent, no matter what levels it breaks, probably going to see a pretty violent mean reversion and or prolonged consolidation thereafter if we see an upside move. Main reason why is we can see BBWP get it back above the moving average, and if it does not stay above the moving average for a couple of closures, we will not see the moving average turn, thus giving the bias that the move is outside of the realm of volatility norms, and you would see this continue down, and then you'll see usually a sharp decline in BBWP. So it's not necessarily going to look something like that, but the idea would be that you get another spike up before a longer consolidation. That's really what I'm saying. It doesn't mean that it's going to be a prolonged top or anything like that, but it's usually that's going to be, it's a quick move up and then followed by consolidation and or mean reversion, and then come back to it later. That's as it stands right now. The only way this changes is if Bitcoin starts to break down below the basis on the weekly, and that's pretty far away right now, and that would be, biased to go test some of those major downside levels. And you would see continued cool down as it would stand anyway. So that is something that I wanted to point out. And when you take that in conjunction with what is happening here on the 2-week chart, we have, fresh 2-week expansion for the past couple of months here. So continued closures above the upper second standard deviation where the daily is now. I mean, the daily could get downside expansion into the 2-week upper first, and if you're not picking that up, then you might be silly as a professional. For those of you that are professionals, at least in the shorter term timeframes, as this is going to come into some major areas of interest. We have 4 days to close this. If it's closing above that 41, basically 41.5, this area was tested at the upper second. We're looking for continued expansion. We got a 48 over 28 read, thus giving us the 2-week bias to the upside. If we did start seeing the upper second lost, then we look to that upper first as being the next big area of interest. And that's coming in between levels. That's at 36,167. So there's the $35,000 monthly. There's the 34,750 weekly to the downside of this area. And then above it, there's the 38.5 monthly and the 39K weekly. So it'd be bracketing, those support resistance areas are bracketing that upper first on the 2-week. If that was lost, then we're looking back to the basis, which is in, a fairly important area when it comes to the weeklies. It's above the closes of these 2 weeklies here. The swing high was kind of governing the close of this weekly here. So that swing high from early April at around $31,000 was kind of governing the closes here once that was the breakout. And once we got the breakout there after the compression, then we saw upside price movements and good ones at that. We still have the 2-week pointed to the upside here in terms of the momentum oscillator being stoked. Momentum pivot is 37,800, so right around $38,000. This is what you really should be paying attention to, and that is the expansion going on the weekly here. Looks very good. Looks like continuation. And we got the same thing going on here with the 3-week, which of course is going to be closing this week. We've got the upper second right where Bitcoin is trading right now around this 43,200, which of course is also a major weekly level. It's also trading right around the close here at $43,000 of the prior 3-week candle. If we're going to see this continue up, we're going to see, we're going to probably see the $50,000 region, to be quite honest. We are just getting rolling with this BBWP read at a 35/18. It is fresh. It is good. It is confirmed. This is looking to expand to the upside. Now, didn't quite get that deep compression that we saw like on the 2-week, but the 2-week aggressive expansion to the upside would most likely tell the same story of somewhere around the high over here at that 48,240 to $50,000 and beyond. If it continues to get expansion in the manner that it is painting right now. The 4-week, we're looking at roughly the same thing. We have a much nicer compressive look to expansion here. And this is going to remain aggressive expansion as long as it is closing above the upper second standard deviation, which, by the way, you can see the daily Bollinger Band levels here are within the upper second and upper third. So if the upper second is lost, we're looking somewhere around that upper first, which is coming in at 33. Now, of course, this is going to close and update at the end of the week here. And headed into the new year, this is likely going to be somewhere around $35,000. So we have 33 on the close here. We have that above the prior low over here, which is 31.8. Now, again, this is a 4-week, so it's going to look a little goofy to some of you who don't pay attention to that 4-week. We're going to have it somewhere around, it's already above this wick low. The next one is 34,300, and then we've got 37.7, which is also a weekly structure on a close open swing. So this upper first is going to be somewhere around that $35,000 monthly pretty soon, I suspect, coming into the yearly open here. So next closure is going to be really big. So coming into this weekend, I would be watching above around $40,000. Again, same numbers coming up. That's the upper second here on the 4-week. We have a $41,000 pivot here. It is trading above there. We do have confirmed expansion. This is not aggressive just yet, like what you see on the 3-week and the 2-week, but it doesn't take much for it to start getting there. And if we start to see another closure above the upper second here this week, then coming into the end of the year, we're probably looking at this getting a little bit more vertical or a little bit more steep in terms of its price volatility look. Now, I will say that we might not see the 4 weeks start to really take off in terms of volatility until the highs are taken out from the previous cycle top. So that could also be another possibility. When looking at the monthly, well, this is what we've been waiting for. This is something we've talked about. I've explained many, many times. Closures above the upper second standard deviation. Every single time that Bitcoin has closed above the upper second standard deviation, it has gone on to make a new all-time high. This is compression to re-expansion on the monthly. That does not mean that it immediately starts to run towards the all-time high. We have the 2016 run where it kind of swung. The 15 into 16 area swung the 14 lower high. Well, we have a 2022 lower high. We could still see this area swung and still see Bitcoin come back down and then try to pick itself up and move on to the all-time high later. But every single time we have seen a closure above the upper second standard deviation, and we have seen volatility expansion really start to kick off between BBWP, or expansion of price action within the Bollinger Bands, and then the Bollinger Bands following through with that expansion, we have seen an all-time high fairly quickly thereafter. Now, of course, when I say fairly quickly, this is a monthly time frame, so please don't forget that. This is still expanding. We are going to get probably a steeper look coming into the first quarter of next year on the monthly here. And we still have upside here of the Stoke and that momentum pivot for momentum for the regular Stoke. I want to make sure that for those of you who do tune in that are not familiar, this is not a Stoke RSI. This is a regular Stoke, which reads close over close price momentum, not the RSI. So in this case, $38,000 is the momentum pivot on the monthly. So if we did start to see the 38.5 monthly violated in terms of closes, especially on the monthly, then we would be looking for, some pullbacks and probably some sideways before things really got ripped into the upside. That's where you get a bit of a momentum reset as this is running a little latent. And we could see it take out the high here, that lower high, and then run right for the highs. That wouldn't be out of the ordinary, but also understand that we could also see this high taken and then it comes back down, maybe even plays around that upper first to basis again. Now, of course, that would scare the ever-loving crap out of just about everybody in this space, except those who are prepared. So something to look for would be any kind of a close that starts to get back below, guess where? $40,000, and that's the upper second standard deviation. So you do want to see a close coming in to above 40K by the end of the year, the end of the week, and that's this monthly here. That then will, kick off that expansion. So this Sunday, while you're watching the ball drop, while you're watching fireworks go off, maybe check the chart as well, because that's going to be pretty interesting to watch this monthly and see if it closes above or below this upper second standard deviation. If it does close below, the next big area of interest is right here at that upper first, and that's coming in a very confluent area that we've been looking at around $33,000. Of course, below there's support and resistance, but in terms of basis band volatility levels, we've got 26,400. It's basically right at that prior higher low on the weekly. So looks really good here. I'm not going to speculate, but I do think things might get a little wild, both to the upside and downside, but with an upside bias in the longer term for a while. And that is because of the quarterly. And this is the big one. Let's actually pull out to the index here. Let's get rid of the daily levels. Actually, you know what? We can keep them on there. They're all squished on the quarterly, but that's fine. When looking at the daily levels on Bitcoin here, in comparison to where the quarterly upper first is, you can see the upper first on the quarterly is at 40,850. And when looking at the daily levels and zooming in, you can see the low side, lower second and third are bracketing that upper first on the quarterly. So again, right into a support area as well, locally and historically. So if we see this close above the upper first standard deviation, the next thing that we need to look for is BBWP expansion. And we got to also understand that even if we see a closure above the upper first, we may not see that BBWP expansion. This may continue to head down. But if it does not expand or contract any further, because this is price contraction as we are in a macro consolidation on the quarterly, what you would be looking for next is for it to stop somewhere around this 21 read and or move up, and we have the moving average moving down. So the next big quarterly that I'd be looking for, so this is last quarter. So July's quarter, it moved down from the 23 to 21. We had the moving average move from a 34 to 30. And at this rate, we would be looking for the moving average to be somewhere around the 25 to 27 area. So somewhere around this area. And if we were to extrapolate out another 2% off of this, we're looking at about 18%. So a very deep dive on the BBWP here, relatively speaking, when looking at the quarterly. But I would be looking for this to start doing one of two things at the open. Either it's going to be at or above the moving average, or it's not. And then it's not until Q2 of 2024 that we would start to look at this possibly confirming on the quarterly. And once it confirms, I want to point this out. Once we see confirmation of volatility expansion on the quarterly, we're going to keep both of these up here. So volatility begins to expand on the quarterly. Back here, we've got it up over the moving average. Once we see it initially get above the moving average here, we get 1, 2, 3. So including the one that closed above, you've got 4 quarters of upside quarterly candles. And then again, we see confirmation come in. We only got 2 quarters the last time. So this is, from the lower volatility levels, once we got volatility confirmation come in, we saw just one more quarter after the confirmation that pushed it to new highs and then a consolidation. And I want to have a little bit of a conversation about this with you guys and gals, because this is super important. One of the things that you'll notice back here is for the quarterly, we'll mark this a little bit differently, quarterly Stoke turns. We'll go ahead and mark this in, we'll call it teal. Well, I guess that would be hard to see for some of you. My apologies, but we've got a turn over here as well. The initial turn right there. It did bounce off of it, get slightly below, but it was not anything confirmed. All right, so let's we've got the crossover. So we're just looking at the crossover, not the full turn. Combined with volatility. So you had the lows already well underway here back in 14-15. We had the quarterly turn. We had volatility still compressing as it was a mean reversion back to the highs. Once it broke the highs, you saw volatility increase. From the Stoke turn, we had the Stoke turn included. We had 1, 2, 3, 4, 5, 6 quarterlies of upside. You'll typically get, after a volatility expansion and a Stoke turn, you'll typically get anywhere between, it's plus or minus 1, 4 to 7 quarters of green candles. So 4 to 7 green candles of during that phase. That does not mean that they're all consecutive. So in this case, we saw the Stoke turn on a downside move into compression or mean reversion back to the lows. In this case, which was back to this high side structure over here. We had 1, 2, 3, 4 total quarterly candles. Still meets the criteria once we had the Stoke turn and then we got the expansion. So we have the expansive phase, did meet criteria there. But once we saw the actual expansion phase, because it happened in between this quarter and this quarter here, we saw an expansion phase confirmation happen right at the highs here. So what does that tell me over the longer term period? What this tells me over the long term is that this is a massive macro consolidation, and something that cannot be ruled out is a swing of the highs again here and then a longer form consolidation. Maybe not that massive blow off top, maybe just a massive consolidation structure. And that isn't something that I'm prepared to get too far into right now. But prolonged cycles, and possibly this being a precursor cycle where this is all just one big massive accumulation for years, could be in the cards. And this is where I differ with some of the people. And it's a theory that we have to see start playing out, right? So we have the Stoke turn on the quarterly. From here, once we get the Stoke turn, we want to see volatility start to either tick up and or like it did back here in 2016, which I think we're looking a lot more like 2016 than anything like 2017 into 18 and of course 2020. Doesn't mean that it can't replicate some of the looks of both or either, but in this case, we are probably, we'll have to evaluate. We're probably looking at least 4 to 7 green quarterlies. And that, of course, means literally nearly 2 years of green quarterlies. That does not mean they all come consecutively. That does not mean that they are all going to be, it doesn't mean that everything's going to go parabolic either. We could see sideways as well. And the way that the quarterly is starting to paint, it's still in a compression for long-term compression. So unless we see a move above that upper second in the next quarterly or two, you don't want to see a slow grind. If we start to see a slow grind, we're probably just going to get a swing of the highs, the all-time high. And then it's going to be probably, maybe a little bit of screwing around, but a slower markup phase. And but if we do see a swing and an expansion kickoff above that upper second standard deviation, and that breaks the all-time highs, we're probably seeing some of those really deep targets that many are expecting. And of course, we will start looking at coming into the new year. We will take a look at where things fall and then see if we can make some predictions about where price may go in terms of areas of interest to the upside above the all-time high, as the all-time high is already an area of interest on the quarterly on a close at 58, almost 59. And of course, the wick high there coming in at $69,000. So this is, there's a lot of theories floating around out there about parabolic nature, and look at gold and look at these assets and look at tech stocks and look at this and look at that. But the way that volatility is being painted on the chart right now, you can see that over time, it started out very, very volatile and it's moving to lower volatility levels. That does tell me, and you can see that the volatility spikes have decreased over time each time. Now, of course, this is the nature of the way that it opened and went parabolic. Now, in terms of, from its inception, this does mean that the longer term cycle would eventually see low volatility followed by very high volatility. Now, that's where we would have to see at what levels is this consolidating, and at what levels is this more likely to head to the upside and or downside in terms of expansion. And as it stands right now, it's impossible for it to hit high levels of volatility on downside expansion as it stands right now. But as Bitcoin matures as an asset, that will eventually become a factor, which, I don't know when this is going to happen. I know this conversation is a little bit long-winded, but you do need to understand, for those of you that understand Bitcoin and the cycles and the cycle theory, I do believe we are entering a period of increasingly lengthening cycles to the point where it's going to really screw with people, and there's going to be cycles within that cycle. And I think we're in that period starting now. And that might dictate what I'm going to be talking to you guys about in this coming year, especially with ETFs. There's a lot of things that Crypto X and Crypto YouTube have exposed about themselves in the past year, and that's that they don't know anything about ETFs, how ETFs work, how cash redeems work, how in-kind works. It's just, they're all over the map. They have no clue what they're talking about, and they don't really understand the implications of what's happening behind the scenes regarding these ETFs and what that means for the long-term price of Bitcoin. And that is something, by the way, it's not good or bad. It's just about understanding what that liquidity does and what kind of leverage, especially the option markets, will have on top of price here. And it's going to, the market and crypto will change dramatically within the next 3 to 6 months. And I do mean for your exchanges, for your altcoins, for your market caps on different bigger assets, including Bitcoin. and beyond Bitcoin, I should say. So just understand that the things are going to dramatically shift now that we have traditional market players in the game. For those of you that are already in the traditional market game or work for a prop shop, you already understand what's coming and what risks need to be evaluated both to the upside and downside as you get we have frothy markets. So let's go ahead and take a look at the other markets here. So in any case, what you should be watching for coming into the end of the year is any close above 40,800 to 41K for the quarterly to get above that upper first. Then look at BWP. And of course, we will revisit this, but we'll be looking at the quarterly momentum pivot, which is 450 or so. This is going to change. And I would, well, I mean, it already shifted to some of the lows. It's going to do one of two things. It's either going to continue down to the actual quarterly lows down here, or because I do think it's lagging back here in terms of its read, and or maybe it's past it and we start seeing it move up a little bit, but I doubt that it's ready to move up in terms of its pivot number just yet. If this dramatically shifts to the downside and we're closing above the upper first on the quarterly, then we're looking to the upper second within the next quarter or so. At least that's the way that the volatility metrics would paint it. So that would be somewhere around $56,000. So somewhere around, somewhere around the actual all-time high on the quarterly close. So we will we'll jump into some other stuff now. We've got a few things to get rolling through, and that is going to first start with Dixie, because Dixie has hit some of our major downside levels. That being it was the daily lower second here at 185, but it did trade down to our 101.50 level. So the wick low of this low today, it did hit that 101.50. Next big target is going to be 101. Below there is the actual lows down here and the $99.50 region below. It's just basically 50 cents at a time in terms of support and resistance. So below 101.50, we're looking to 101. Below there, the downside risk area is going to be around, I'm sorry, we already hit 101. We're past 101. I'm at $100.50. Below there, 100. And then below there, the next support level on the daily is going to be that 99.50. If we did start to see that breakdown coming into the quarterly close, because we are looking at longer term timeframes, and I did want to talk about this, we can see that on the quarterly here, the basis is likely to move up to around that 99 to 99.50 on the quarterly. If we do see this area dropped, we're already looking at this painting a technical close open high here. It's up here. This would be your swing high below it. And then another closing below this prior low, which would bring into play the wick lows at that 99.5 to the basis. If it starts to lose the basis, which is right around these highs at $99, then we can evaluate, support resistance on the quarterly somewhere around 95 to the lower first there at 93.5. Not necessarily the first thing I'd be looking for, but that would be a breakdown, a technical breakdown, but a much bigger upside structure here on the dollar for this particular move off the macro lows back here in 08 to the double bottom in 2011, 2012. So understand the context. This would still be considered on Dixie a high level. It's brutal for Dixie and good for other currencies and assets and indices. Bad if you are looking for the value of the dollar to increase in any respect. Yes, it is a macro downtrend, but in terms of momentum shifts, I do want you to understand, and this is very counter to even what my belief system is when it comes to the Federal Reserve U.S. dollar or U.S. note. But this is a technical reversal on the quarterly, just so you understand. Now, the U.S. dollar would have to change, in my opinion, to actually break out into a macro bull run, and that would, of course, be good for people in general that use the U.S. dollar, bad for just about everything else that you are holding a long-term investment in. As versus the dollar, you would be better off in dollars in that case, which I obviously am a Bitcoiner and I don't believe in the US dollar and I don't believe in its viability unless it changes and adopts something like Bitcoin as backing and, physical backing through metals, precious metals, and the like. But we never know what's going to happen ever. And I want you to understand that this particular reversal to consolidation to up move to maybe more consolidation on the US dollar in terms of macro outlook is not necessarily uh, the worst thing. Yes, it's down only, and yes, it could keep continuing down. But if it was to go into an accumulation for a prolonged period of time, and let's say it gets backed, well, then you're looking at it becoming something very different than what it is right now. And then you'd be looking for a bull run across whatever it's backed with, along with it itself. I did want to put that out there. I know it's crazy, and I don't think it would be run by the Federal Reserve if that was the case. But either way, let's go ahead and take a look at this daily again, just to get a peek at momentum and volatility. I do think, this could still play around the lows, maybe even break down below the current low wick at 100 and a half and maybe hit the 100 area. 101.60 is going to be the momentum pivot. And we don't have a volatility cool down just yet. It is getting underneath the moving average. But again, we need to see the moving average get a negative slope and then get follow through for mean reversion, in this case, back to the upside, which would be towards the basis, the lower first end basis, basically back to test around the 102.5 to 103 region. In this case, I do think it's probably going to play around the lows a little bit longer and lower. If this isn't it, this is pretty fresh expansion. It's re-expansion at that. Nice little cool down on the lower high. Boom, down. So this is definitely in play. That 99.5 to 100.5 is going to be the main zone of interest, and then come back to it if it does start to aggressively bounce from here. If it doesn't, we're looking down and to the right over time. Weekly is likely painting the same picture. Yeah, it's expansion on the weekly. It is oversold, but this is confirmed expansion on the weekly to the downside, indicating that if it breaks down from this weekly low over here at that 99.5, that it is going to test down somewhere into the 97 to 95 region. There is quite a bit of structure down here, so I would say it could just swing it at 99 and then we come back to it. But if it does start to really dig into that area, we're looking at, 95 to 97, possibly lower. And until we saw, a macro breakdown below, 90, that's when, this is kaput, and call it dead. Call it what it is. It's a macro distribution, not a reversal to possible accumulation. But as it stands right now, it's got the possibility for, and in my opinion, it's got the possibility, I guess the quarterly is kind of ugly as shit, huh? It's the 6 month, and it's probably not going to do it this 6 month period, but it's the 6 month ride in that basis band, and giving itself the opportunity to turn back to the upside on closes right now above 101.43. That's likely going to be a little bit more palatable number, to be quite honest, because this is coming in off of this prior high here. Still reading that. We'll have to see what this opens at, but we'll have to take a look at the 6 month. It is something to pay attention to, especially coming into the 2024 elections into 2025, because that could have major implications for the dollar. And I think that the dollar probably strengthens if there's one specific candidate, if he is allowed to run. I think the dollar strengthens, but I'm not going to get into that until he reveals all of his platform. for and as they're still putting together their strategy for in response to what is being done under this current administration, for how to solve some of the problems with the U.S. dollar, as they do want the U.S. dollar to reign supreme. But maybe they'll be looking into some other things to help it. Never know. Maybe it shouldn't be a Fed thing anymore. Never know. Um, and then, of course, we'll just jump over to Bitcoin because I got an alert here. We're pushing 43 and a half almost. On the high there, yep, about $17 shy of 43 and a half. All right, let's go ahead and take a look at gold. Many are speculating like crazy prices on gold. I would say, we've gotten some crazy prices on gold already. Hey, we have on the daily now, remaining above 2012, gotten re-expansion back to the upside into the upper second standard deviation on the daily, and tested our weekly all-time high area at 2000 and all-time high at $2,081, and wicked above. There is a big wick to get through here, 2021.46. So that's going to be the area to the upside that I would be looking for. Next is to kind of fill out that 2100 area, possibly come back to it in a little bit and see if it keeps pushing. Now this, if it does break out above here, I would be looking for somewhere around the highs, maybe even a swing up to 2200 as a possibility. If we start seeing this close back below the 2060 bucks, then we're looking at 2034.35 right here at the basis band, and below there, this prior low to the lower second, somewhere around 2000 to 2020, where this prior higher low came in. Nice little reversal structure here. Looks good. Uptrend, nice bounce off of, after the trend shift, a nice expansion, and then base off of the lower first when it is above the prior low. I love those setups. And then at least to go back and test the high side area. It did that and then pushed on through. Beautiful, beautiful, beautiful thing. This looks to keep, this is going to look to keep going over the course of this week into the end of the year. I do suspect. When looking at the weekly, we're looking at we're looking at 2122. If it keeps pushing this week and especially breaks out above this 2081, then we are looking for this to keep heading up. What I will say is on the weekly, this is mean reversion back to the highs because we have long-term highs over here. So we had the consolidation and then an expansion back to the highs. And now it's mean reverted locally back to the highs. We'll see if it continues to push up, especially if it can close above. In terms of price volatility, if it can close up. When we had this expansion to the downside, it shot back to the upside, which was mean reversion back to the highs, is what I'm trying to say. So what we would essentially want to see is, maybe even a swing to and consolidation up here above the prior high. And then a bit of consolidation, a re-expansion to the upside. But it is kind of painting the picture that things are likely to keep playing around in this zone between the basis and upper second as the more likely areas of interest. And that is, anywhere between 1962. We are looking at the weekly, but really talking more like monthlies and quarterlies. And, anywhere up to around 2100. As kind of the zone with deviations above and below as possibilities while still remaining very strong. So, big swings on the dailies, big swings even on the weekly. But the volatility metrics are kind of painting that is available while it's still maintaining its strength. We have this upside expansion on the monthly, still going, closes above that 1993, looking great on the monthly. This is a mean reversion play. Again, on the monthly, this is mean reverting back to the highs, and now it is higher. So to be fair, if it closes up here, boy, oh boy, it's it could start painting that picture that, some of those deeper targets, 2,500, maybe even three grand is on the table, but that's all the way up here. That's a lot from here. I would still be looking somewhere around the 22 to 23 on the high side for a little while until we saw actual aggressive expansion and not range play. As it stands right now, closures this month above $2,032. Gonna keep this thing going. Closures above 21,115. Really gonna look good for expansion. The quarterly closing above 1900, 1906 in this case, looking really good to go. Test the upper second standard deviation. That is hidden here. My apologies for the mess, but we will go ahead and get rid of some of this because on the quarterly it really does look nasty, huh? That daily support and resistance we don't care about right now, as the quarterly is just, well, the quarterly is getting around a topping point also. So there is counterpoints to this, and this is where I say be careful. 2142 was already tagged, so 21 and a half, 2150 is where the top came in, and this is expansion to tap on the upper second and then mean reversion. It's still a macro structure that would be, in this case, getting ready for expansion, but we're looking at a quarterly. It could take a very long time. Only if it happens quickly within the next few quarters would I be looking at this, really aggressively starting to move. And to be fair, we're going to know. We're going to know in a couple days here. Being above the basis, which is all the way down at 1750, 1746, that's going to move up probably somewhere around the low side structure, around 1800. But this is going to look really good if it can get this turn above 1900, 1906, get the quarterly turn, then it's really going to be about the first quarter into the second quarter of next year, and we could be looking for some big volatile moves in the longer term time frames that are influencing those big volatile moves in the lower term time frames. And you could see that borne out in the daily as well. Looked really good. And I am excited about gold. I am a little hesitant around the 2150 to 2200 area until I see some strength above those areas. And a start is a close above $2,081, right? So it is trading slightly below there. You could call it $2,080. If it starts to breach that area, we can start evaluating those upside areas for possible tests and then continuation. But always be a little cautious. We do have the all-time high being breached here on the quarterly, giving us a nice quarterly target on Dow that we're looking at here. All-time high being breached and closed above on the quarterly is going to give us the bias that the upper second standard deviation and maybe even slightly above is going to be in the cards. That's coming in at $39,000. I'd be looking somewhere around $39,000 to $40,000 as the next big target for the upper second standard deviation. And if Dow closes above the upper first, upper second is in play and likely to get tagged. In this case, the upper first is coming in at 35,000. Very nice to see Dow above there again. And that's going to give us, that range between 35,000 and 40,000 points for Dow. That is the next big area I'm looking for. This is a high-level consolidation with a turn up in Stoke, 33,000. It's going to do that. We are not looking at expansion, but this is, up and to the right. When we start seeing expansion, it's likely going to happen in between the upper first and upper second, thus pushing things probably, into the 42 to 45,000 point area. If and when we do see that, I don't think that it's a foregone conclusion that is going to happen right away, but it is very much in the cards right now. I know that sounds a little crazy, but it is not when looking at the monthly, especially. Closes above 37,150, which also close above the upper second here. That would be the upper second, are going to kick off expansion, and it's a breakout above the all-time high. We also have Stoke supporting it. 37,530 is going to be in support of this. Um, if it can maintain the Stoke look there and turn that quarterly to the upside, we're looking at volatility expansion. We need to see follow through in January into February to get a Stoke turn with a momentum shift on the moving average as well. I'm sorry, not Stoke turn, a volatility turn, and then a shift in the moving average. But that would, the upper second standard deviation would give us the bias that is going to confirm soon, as long as Dow remains closed above, on close over close, January into February above that upper first. We would start to see volatility expansion to the upside be confirmed by BBWP as well. So this looks very good. How much does it have left on it on the daily? This is just looking really, it's just riding the upper first again during a cool down, and then all those expansions are, pushing it through some of the major areas to the upside. So all of the expansion is happening between the price expansion is happening using the upper first as a base, and then breakout above the most recent high is pushing the expansion to the upside. So in this case, if we did see a close above this open at 37,311, and it's threatening that, and then especially above this wick high and today's wick high, we're likely to see expansion of volatility within the upper first to that upper second, so giving us a 38,100 point target area. We can see that momentum is shifting a little bit here on any closes above 37,660, and it's not there right now. So we'll have to evaluate, on Friday when I pick back up with this, where it is, but it's looking as though it wants to keep testing around the highs. If it does lose the 37.4, then just pay attention to this close down here at 37,082 points to the basis at around 36,750. As the big area, because below there, then we're paying attention to somewhere around 36,250 to these lows over here at 36K. Let's go ahead and take a look at NASDAQ. NASDAQ, of course, also making new all-time highs and playing around in this area. We can see that, this is doing the same thing. Cool down while remaining above the upper first after nice expansion. I would expect maybe a stab at 17 to 17.2 for NASDAQ before this is all said and done. But if it does lose the upper first before then, and then subsequently lose this close down here at 16,550, well, the upper first is 16,750 to 16,550. If we see that area lost, I would be looking somewhere around the basis to this low side structure at 16.5, 16.3 to 16.5, and then come back to it later. There is support down here in the 16,000 to 16,150 area as well. Looks all right, man. Now, to be fair, 16,910 is going to be the momentum pivot. It is, right around that area. Not necessarily looking for it to continue above there just yet, but we are seeing expansion confirmed on the weekly, and it's continuing. So in this case, the upper second, any closes by the end of this week above 16,934, and we're looking at that 17 to 17.2 area and the daily, and possibly even more, to be quite honest. From the weekly perspective, though, the downside area at the upper first is still in play, and that's right in that daily area that we just talked about, around 16,150 to 16,300. Or if you'd like, you can take 16,000 to 16,150 as that last kind of zone below the basis on the daily for horizontal support and resistance. Looks very good. Now, any close below 16,760 would turn Stoke to the downside, but I would caution you, the weekly is still getting expansion to the upside, so more likely to get continuation to the upside until we see this start to curl over in a substantial way. Now, the monthly is still remaining expanded. It is still below the moving average, so this is mean reversion back to the highs for a little bit here and then possibly higher. closes above this monthly upper second standard deviation at 16,930. Would really start to paint the picture that this thing could take off to the, possibly even mid 17,000 to 18,000 area. Not as long as it's above the upper first, which is a massive drawdown, to be quite honest, which is 15,163 on the monthly. You don't want to see that area violated, but it's still in high or low territory as long as it's above 14,000. So to be quite honest, I mean, it does make available that mid 17,000 to 18,000 point area, especially on new fresh monthly highs, just starting to kick off expansion of the Bollinger Bands themselves while remaining high volatility. 16,750 is going to be the momentum pivot there. It is currently trading above there. Let's look at the quarterly. Again, this is a big one, and this is where you got the $18,000 upper second standard deviation. Yes, I did peep this earlier just to make sure I knew where it was. And being above 15,000, which is the upper first on the quarterly, looks great. And also you can see daily expansion of the bands there is in that, just below that area, the mid 17,000 area at the upper third. And I'm going to tell you right now, if it starts to push that, we're probably looking maybe even deeper 18s. That would be crazy, maybe even 18 to 20 over the longer term. This is a beautiful mean reversion to the basis on the quarterly. So we'll get into some fun with fibs and stuff and some projections. Maybe later. I'm taking a little bit of my time with this, as it's been almost 2 weeks since I've really talked about this stuff extensively. So we might save it for the next stream or after the quarterly open in the new year. When looking at the quarterly again, we're getting the quarterly. I just want to double check with that quarterly on NASDAQ just to be sure. So yes, it's 18,000. So when looking at SPY, for instance, on the quarterly, we're going a little bit backwards because I already had the quarterly open. SPY still hasn't made a new all-time high. So when looking at SPY, it is lagging. It's finding resistance around our 476 target. So it's kind of hanging around the 475 area. But we can see that the upper second standard deviation on the daily here is now above the all-time high, and it's coming in at our target of around 480. And we can see that the upper first is now within our target zone. So if it is lost, we're looking to 470. Below there, we're looking to this last closing low to wick low area, somewhere around 467, possibly even a dip down to the basis at 465 to the downside. I wouldn't be looking for too much more, until we saw some sort of technical breakdown on higher term timeframes, which we're not seeing. This is pushing the highs. I would want to see it swing higher first before looking at some kind of a low structure like this being taken out. If this was taken out, I would be looking back to like 455, 460, but I would see that as still being in a position of strength when looking at something like the longer term timeframes. Now we can see consolidation of Stoke above or in the overbought zone. 476 is going to be the momentum pivot. We see a cool down while it is riding the upper first. So upper second standard deviation, we would see closes above there and or on that area around the all-time high be getting some more volatility expansion or a compression of volatility within the upper first and upper second while it just kind of grinds sideways and up. The weekly also painting the same picture, coming in right at the all-time high there for the upper second or just slightly below it by a little more than $1. So, we're looking at 478, closes above there. It's going to be increasing the angle of volatility, which is already very volatile. We can see it's an 86 over 73. Looks good still. 474 is the momentum pivot. Looks good as it stands right now. And this is expansion. So any kind of mean reversion to the upper first or even the basis is perfectly fine. And that's 445 to 460, just so you know. That would be, sky is falling moment for just about everybody in traditional markets. All the narratives would start hitting, and quite honestly, most of them are wrong 99.9% of the time. Anyway, that's why we chart, and we've been accurate for years now. When looking at the monthly, closes above the upper second at 473 are going to be very good. That would be volatility expansion on the monthly, and that would be, at least looking at the all-time high and a little bit higher into the 500-point range. And we can see that 475.30 is going to be the momentum pivot. We do see a crossover from the prior monthly into the current monthly of BBWP. You want to see that the moving average coming into the end of the year and open of January's candle, getting that upward, just slightly pointed up, but you want to see a little bit more aggressive upside on that moving average there. When looking at the quarterly, upper second standard deviation is in that $500 range. So that's where I'm getting that $500 target. And then above, we could probably look 515, 530. If we do start to see, things expand past the all-time high, then we're looking at that upper second on the quarterly, somewhere around 506 to 510. I would take it, 500, 505, 510, 515, because that's probably how it's going to operate anyway. And that is on any closures above the upper first, which is at 440. So if that area is dropped, got to pay attention to that quarterly wick low at 409. Below there, we're looking back to the basis for a major low retest on the quarterly here. And that's quite a ways away. This is at 376. That would be brutal, but still an uptrend. You don't want to see it happen without this all-time high getting broken, though. I will tell you that. You do want to see this all-time high getting broken, and the bias would still be that Dow is doing it, NASDAQ's doing it. It's just we'd be looking for SPY to just be lagging a little bit here. All right, that's pretty much everything. For those of you that have sat the entire time over there in Parsec, I want to ask you, did the audio resolve, or did you have to do a reconnection? Okay, so it was fine. Cool. Yes, it's good to hear you guys too, as I do have that audio still on. I did hear you guys chatting, yes, and making fun of me, yes. For those of you in the public streams, this is for people that I will say advise, and I also teach, but that's not something I want to get into. But they cannot, from their workplace, view YouTube and Twitch. Those sites are blocked there, so they have to go around that by parsecing in, which is allowed. Because I'm able to parsec to them. Yes. All right. And parsec, by the way, works really well. Not sponsored, obviously, but it does work really well. I like it a lot. For those of you that are here publicly, if you have any questions, I will take a few just for a moment here. While we're doing that, we'll go ahead and we'll take a look at Bitcoin on the 15-minute. So see how it's doing. Nice little expansion to the upside. Nice consolidation, holding that lower first, regaining and spiking that upper second. Once we saw the breakout above, it was also upper second close above. Also was the highs locally. So we get a nice little expansion up. A little bit of a Morningstar doji there. Or shooting star, if you will, or whatever you want to call it, but or evening star rather. It's not morning, it's evening. So that would be your evening star reversal setup there. If it starts to close back below the wick, and especially put in a 3 candle here below the open at 43,342, then I'd be looking for things to come back down, at least try to base out around the 43,150 to 43K area again. Yep. Oh, volume. Yeah. Volume on spot. Big high volume candle. Yep. I mean, it's not, the highest volume candle. It actually came in on this low locally on the 15-minute earlier today. Yeah. Or earlier, this would be the Monday Tuesday, day after Christmas. I'm all confused. Don't worry about me though. Yep. Yeah, there was higher volume over here on the move back to 44 to 44.5 area. Mm-hmm. Yeah, so I mean, I would mark those areas off. The higher volume areas are the areas that you want to mark off. If you didn't already have a volume map created up to around 45,000, then I would be marking off the close open of the highest volume candles, as they will define your range, at least locally for order books. You can kind of deconstruct where the areas of interest on an order book would be by doing that. Yeah. Yeah. Okay. No, we didn't get a lot of viewers. I mean, I got eight or nine people in the, oh no, there's 10 in the YouTube. I've got a couple in Twitch over here. If you want to chat, I'm unable to get the plugin working for Twitch over there, and I'm not on the site itself. So if you are on Twitch and you want to ask some questions or have a comment, I would jump over to Landy's Crypto Corner on YouTube, and you can chat there, where I actually have the plugin and actually am observing the chat. I see some regulars here. I see Roka, No Name, Bobby, and there's quite a few others that are actually in here, more than I thought today. And Don is here. Hello, Don. And a few others probably. But they're just not chatting actively right now. That's all. Just one or two, as I did run a little long today. Spent a lot of time on Bitcoin. But yeah, if you got something that you're interested in, go ahead. I'll take a look. We'll turn on the music to cover for me taking a sip of water here as well, and getting a little bit of nicotine in my system, even though that is not healthy and you should not do it. Do not smoke or vape, kids. It's bad for you. Let's go ahead and get this. We'll turn music to about a 30 read, so it's just kind of sitting in the background. Oh God, what am I doing? Wrong way on the mixer there, my apologies. All right. Yeah. All right, so Don has requested ETH BTC and Bitcoin dominance. Yeah, I mean, we can take a look at that. That's something that I believe we'd be following up on, because the last stream, I believe that you requested this as well. So this is a good follow-up to what we had looked at prior. Maybe not ETH BTC. We may not have looked at ETH BTC, but this was a nice run-up in the last 15 minutes for sure. But, you know, the context for ETH BTC is that, you know, this has been a downtrend back to this low side structure at about 0.5 Bitcoin, 0.05 rather Bitcoin. You know, it's tough with ETH BTC because it even if it gets expansion here, we're probably looking at 0.06, this low side structure here on the daily. Judging by where it is, you know, momentum's pointed to the upside, and if it starts closing above the upper second, you know, this has been a daily downtrend for a while. So if it does reverse from here, you know, it's got the higher low, it's got the swing structure in place. So it's got the swing lower low, it's got the swing high, it's got the swing higher low, and even a closing higher low today. So you do have the swing structure in place, and you have the trend reversal structure in place, but it needs to aggressively close above its wick high and the upper second standard deviation at about 0.055, I would say. That's where I'd want to see it start breaking out and closing above on the daily to start looking for this to reverse, to head towards 0.06 BTC. And, you know, could it get there? Absolutely. I do think it's viable for it to get there. Let's look at the weekly. Could be a weekly macro low being set here for this consolidation. But we got to see it start reversing. I'll be honest, it does not look healthy to me. It looks like garbage at the moment, because it's flirting with disaster, to be quite honest. It's flirting with heading down to like 0.0375 or lower, but that does not mean that is what is going to happen. It looks like shit, and everything looks like shit on the lows. Everything looks wonderful on the highs, right? So could it be setting a low here and setting up for a reversal? Closing back above the lower first is the start. breaking this swing downtrend high, which is coming in at that 0.058. Again, we're looking right back to the 0.06 Bitcoin area. So realistically, above the daily, above 0.55, that puts it above the daily upper second. That would give me the bias that things are going to go test around the basis at 0.057, 0.058 at the wick high or swing high on the weekly. If it can get above there, then we're looking at 0.06, 0.064, 65 area and above, right? Because that's the weekly lows up here. So I would be looking, 0.06, 0.064 to 0.065 Bitcoin. That's where I'd be looking. That would also start to paint a reversal on the weekly in terms of structure. I do think it would get some pretty harsh mean reversion, but at least the structure would be in place for it to bounce off of any kind of pullbacks. Now, 0.054 is going to be the momentum pivot on the weekly. It is currently above, K is above the D read, so as long as it's closing above 0.054, it should maintain that momentum pivot. This is just reading as mean reversion right now, so I would be very careful until it can break above the basis and this prior swing high at 0.58. It's actually 0.5849999999, so 0.585, 0.0585, sorry. Then I would be looking for 0.6 to get ran, 0.06 rather, and then above to 0.065. To the downside, if it does not break out of this consolidation and downtrend on a swing basis, then I would be looking for the lows to be viable at under 0.05 Bitcoin. The current lows by the lower second. If we start to see it expand down further, beware of this wick low because it's flirting with disaster at it's 0.04908171. So basically 0.05 Bitcoin is kind of the make or break area for ETH BTC. Now, of course, that doesn't mean that Bitcoin or that ETH is going to go down in US dollar terms, just that Bitcoin is outpacing it in those US dollar terms. So keep that in mind. Obviously, I know that you know that, Don. That's more for those that may not fully understand that read on that. Now, in terms of Bitcoin dominance, I passed it. It swung the area that we talked about. I mean, 53.25 to a high of 55.25, and I think we talked about 55.25 because that was the upper second. So, on the weekly, we did talk about that area. On the daily as well. Now it is aggressively pulling back, which might be good for ETH BTC. It did lose this low over here at and the lower second there at 51.66%. It is playing around this this little stair step structure. So we've got 51.25 to around 50.75%. Below there, you can see this is also a high matched with a low. Below there, then we're looking for a drawdown to around 50% to this area here, just under 50 at 49.7 to 49.5 or so. Below there, you need to see it holding up around 49%, and I think it will probably get a pretty aggressive bounce. It might be ready for an aggressive bounce here pretty soon anyway. Don't confuse bounce with reversal. This in order to get a reversal right now, it needs to regain 52.8% and take out the last lower high here at 53.94, so basically 54%. Back above there, then we're looking for the highs to get ran and higher, and eventually we're looking at 58 to 60%, but it's not there yet. 51.75% is the momentum pivot. It is trading below there, so it's looking like continuation to at least keep playing around this area. It is coming into a zone of support on the weekly, but again, the low side area is going to be around upper 49 to 50% at the lower first, and then keep an eye out on that 49% area If that area were to be lost, I'd be looking for it to swing and try to come back up and then reevaluate. But as it stands right now, it's down on any weekly closures below 53.5%. Monthly is going to be down on any closures below 53%. This is aggressive expansion and then a move to the upside here. It's still what is still in play or still at stake for Bitcoin dominance is that 58% low on the monthly. Otherwise, it's just going to consolidate somewhere, I believe, between 45 and 50% for a little while. If it does drop that area, then we're looking at between 42 and 45 typically, somewhere around that lower first, maybe even 40% these lows again. Is that good for the altcoin market cap? Yeah, I mean they're outpacing at that point. It being below 50% in terms of dominance. Altcoin market cap's going to probably race to new all-time highs and stuff like that. But as it stands, that's kind of your in-between breaks. And that's what I'm talking about, lengthening cycles. Like, it doesn't match any 4-year cycles for a lot of these alts, as many of them are too new for any of it. Many of them, almost all of them, with the exception of a few, are less than 4 years old, or maybe just now hitting 4 or 5 years old. So there's no cycle to be looking at. And for all those damn freaking charts that talk about altcoin cycles, man, they could kiss my ass. It's a liquidity cycle, not an altcoin cycle, and that's where they are misleading. So, but if Bitcoin, gets its ETF approved early January, let's say the 10th, really does seem as though they're pushing for that date. We're liable to see this just leg right up and defy gravity and momentum and all that stuff. It is above the upper first, so as long as this is above 50%, it makes it more likely that we're going to see that 60% read. But it's strong right now, and volatility cooling down is the mean reversion play here. It's a double bottom on dominance, so I do think eventually this trends down forever, as its pairs are going to change, and I do believe that we are going to see Bitcoin dominance, maybe in relation to altcoins, will always be around, but I don't think it's going to be very important as Bitcoin moves into its ETF wrapper stage. So something that I will talk about more after an ETF is announced. Then also we'll get into, we're going to be talking a lot all next year. We're going to be talking about options. Like I'm not going to start off like right away with it, but we are going to be talking options, because you will need to know how to trade options if you want to be, if you want to make money quick, you want to hedge what you have, you want to accumulate more, you want to get cash rich on whatever currency, you better know how to trade options. I think it's going to shift more and more away from all these Mickey Mouse exchanges, and you're going to see a lot of changing of the guard. And that guard is going to be a very big financial industry and juggernaut that is the traditional market players who have seemingly, in crypto terms, unlimited amounts of resources to invest and shift things. But yeah, conversation for a different day. But my ideas behind this stuff might actually surprise some of you. I know that we've talked about many things, but as we start to get into what these ETFs are, especially with cash creates versus in-kind, which they were pushing for in-kind and now had to switch to cash create, which creates a derivative market on top of Bitcoin right now. Which it's the same thing that we're getting with gold, because who's really going to redeem? There are ETFs for gold that can redeem the actual underlying gold. Most are just cash creates, and the reason why is tax expedited. So you don't want to pay tax every time. Management fees shoot through the roof. Nobody's going to want to buy the ETF then. That's part of it. The other part is who's really going to store gold. In this case, Bitcoin is better gold. Because it is digital, it is limited. It's not subject to the mining of expansion of mining of gold. like gold is, right? New mines can be opened up, which means that there's more gold. In this case, doesn't matter how many Bitcoin mining companies open up, there will never be more Bitcoin. I know there's a lot of talk about like, oh, we're going to expand supply. That's a big risk. BlackRock's going to do it. Yeah, no, they're not. All it would happen is a decentralized network would form, and there's no way they can do it. They will become the also ran, especially if they're running fiat cash creates. They would not. This is where this conversation is pretty much out the door, out the window, and not really a relevant conversation to be had. But the cash create market is going to create an options derivative market that is so far beyond what many of you are used to even looking at. And if you don't even have a handle on open interest right now, then don't worry about it, because you're going to be learning all about options markets and option open interest, because that's where the open interest is really going to matter. And it's going to make the current open interest levels in this market look like a literal drop in the bucket, which means that the market can move in violent ways. And that's where your traditional analysis, like we have been doing here, is going to come into play. And a lot of those order book junkies and a lot of those open interest junkies and a lot of those wave junkies are going to get eaten alive by the volatility monster. So if you don't know volatility, you better start learning it. Good thing that's all we talk about here. Yes. Yes, the volatility monster will eat all your dollars if you're not careful. Yes, it will. Yeah, the volatility monster will eat all your dollars if you're not careful. But at least in this case, because these are cash create ETFs, the in-out is cash then. And that doesn't mean that there's not going to be in-kind ETFs, because it's actually almost preferable to get the cash creates first. I was a little nervous about the in-kind at first, because then it's just, it becomes a very big tax liability. A lot of people are like making a big deal of, oh, it's just a derivatives market on top. Yeah, it's the biggest derivatives market of your freaking lifetime that has ever entered this space. So if you're not paying attention to volatility, you better understand it real quick, because you're going to get blown out if you don't. And the big thing is with the metrics that we have to be paying attention to with cash creates is, you want cash creates to come first, because you get a lot of that volatility out of your system, and in-kind will come. There'll be in-kind Bitcoin ETFs, maybe even by those same companies, right? Like your BlackRocks and stuff like that, after they get the cash creates spot, because then it's basically tracking spot, right? Yes, there's real Bitcoin that is backing it though. That's the thing, which makes it good. It just makes it, you're not a hodler, right? But this gives the market time to understand how Bitcoin works. I would almost rather that the traditional market structure understand this and feel like they don't have to be saddled with, if I redeem, now I'm getting the coins and this and that. And then I have to figure out, there's these extra steps to create cash for me then from there, because then the coins have to be sold on the intermediary. Like there's all kinds of different steps, and that's just cumbersome on top of like trying to learn Bitcoin and cold storage, and maybe you did want to get Bitcoin for cold storage as well as the ETF, and you wanted to have the ETF tracking in the market so you can hedge while you're holding Bitcoin in cold storage. This is actually an easier way to do that hedging against the spot Bitcoin that you might hold in cold storage. So this is actually a preferable way to go. And I am not against this by any stretch of the imagination. I know there's people that get really pissed at me about that because they quite frankly don't understand how these markets work. If it was an in-kind market, you're actually going to be, it would do more harm to the holder at that point, because you're paying such a markup. You're incurring all of the cost, right? They're not going to incur that cost. It all gets flooded under fees. Right? It's all management fees at that point, which is, yeah. And this creates a competitive landscape for management fees. it gives guys slush too at these different, across those different spot ETFs. It gives them, it gives them a little bit of a level playing field. If I'm a smaller player, I might want to lower my management fees so that I can take some market share. And it's easier to do that if it's cash creates versus in kind, where I literally am saddled with an extra barrier for my customer. So again, this also gives the customers time, from the customer perspective, time to understand Bitcoin at its basic levels. And it's not like Bitcoin is not going to be sold on spot exchanges. Like there's not going to become a time where you cannot get Bitcoin itself into cold storage. It's just a matter of who you go through, how much it costs to do it. In fact, for those people that raise hell about this, if you have Bitcoin in a cash create spot ETF, you can go to your money manager, your portfolio manager, and say, hey, I want to sell some of this, but I want to sell some of it into actual Bitcoin. Can you do that for me? And they will have a mechanism to do that. They already have a partner in the custodian. It's just that you are now taking that as it being a built-in option to an outside option, meaning instead of it being built into every exchange of the shares of the ETF for every customer that ever buys the ETF, now you're extrapolating that out to a per customer basis. So you go, I want to redeem for cash, take that cash, and that cash now is outside of the ETF structure itself, but within these, within the management structure of my portfolio, they'll just go and obtain Bitcoin right through the same partners, right? So right through the same custodians and everything, and it's all very seamless. But it's a choice now instead of something that you have to pay for. Yes, because it will be an extra fee. It's going to cost money for them to do that for you. Yeah, they would literally just go and purchase that with the same custodian. Yes, so in this case, it would be like Coinbase. They would go and say like, okay, yeah, exactly. So yeah, what you would do is, okay, it's a cash create ETF. You redeem. You have your portfolio manager redeem. They redeem because they're partners with the same companies that hold the ETFs through that same infrastructure. Just go right to the custodian, buy Bitcoin, and you're allocated, that Bitcoin through that custodian, and it's allocated to your portfolio as Bitcoin instead of the spot ETF. So you're just taking that step and making it something that is outside the structure of the ETF and something that is the structure of the person managing the portfolio. Yeah. And that's preferable. It takes a lot of pressure off the clients and investors. Yeah. I agree. A lot of hay is being made about it, though, being a cash create. And I will find a structured conversation that I can have with you guys about it, maybe where I can pull up some examples and stuff like that of kind of maybe there's a couple flow charts out there, and I can talk about why this is actually better to start with, and keeping in mind that in-kind will be there. Once you got a cash create, in-kinds will come. Yes. Yep. Great convo, great question, great comment. Yes. Not as big a deal as many believe. So let's see. Let's go back here. Don had mentioned the ETH BTC on the weekly in combo with the ETH chart. ETH.D is showing some bottom signal. Yeah, they are. I mean, it always looks as shitty as it can look right before it's ready to break down to a new level. In terms of ETH BTC, when it's showing the signs of a possible reversal, but it's gotta see it break above 0.55 Bitcoin. Once it's there, you want to see 0.06 Bitcoin reclaimed and reclaimed to its strength. I will tell you that. Looks like it's bottoming. Still not confirmed by any means. Yeah, it's still just a downtrend. You at least want to see the swing high from the ETH BTC downtrend taken out, and then that's above the criteria of 0.55 as well, which would be the daily criteria. Then you've got the weekly downtrending swing high at 0.57. Above there, then you're looking at 0.06 to 0.065. You want to see that area reclaimed with aggressiveness on ETH BTC. I know I don't have the chart on there, but I still have this all right off the top of my head because I just looked at it. Yeah. What are you saying? Bitcoin, Bitcoin on the daily. Yeah, it's a little bit range bound look in terms of volatility right now, as you can see. Did regain the basis, so the upper first is the most likely play at 43.8 to 44K. If it can beat out the 44K on a close, which is this last lower high close, then you're looking at 44.5, 44.5, which will put it above this close open structure over here at 44.1. And you're looking for the highs at 45 to the monthly at 45.5. And then, of course, above there, 47K monthly to the 48.240 swing high. And then I would be looking for 50, 55, and then 60, and then the all-time high pretty quickly thereafter. If it didn't just swing the 48.240 and then aggressively move down. That's not my first take on things. So my first take is this is a consolidation. It's bullish, and until proven otherwise. Yeah, the proven otherwise is basically lose 35K on the monthly, and it's going to be a long form accumulation or a longer form accumulation. Yeah, but being above these weeklies, 41.8 looks good. I agree. Cool beans. Well, I think that's going to do it for me today. We talked about quite a bit. And if you did come in late, I would suggest that you go back to the early part of the stream where I went through all of the main areas of interest on Bitcoin. And then in particular, what to look for coming into the close of the weeklies here, and of course the close of the yearly. So that's the yearly, the 6 month, the whatever time frame you want to look at is closing. So, but the yearly, 6 month, 3 month, or your quarterly, and monthly, so on and so forth. So we looked at all the criteria in the confluent areas. Many of those areas coming in around the 33K on the upper first. We're already looking at expansion. It's very bullish still, especially on the monthly as it stands right now, above 40K on the monthly. Yeah, all gravy, baby. We'll check in on this on Friday again, where I will have a live stream yet again to kind of get you guys back into the groove of listening to me talk about this stuff. We can always cover a few things. So if you have any questions that you come up with between now and then, please get them ready for me on Friday. And, if I can get through things quick enough, because I spent so much time on Bitcoin here, and we'll just kind of check in on things on Friday, and then we'll go ahead and take a look at that review for the weekly, and then the monthly, quarterly, yearly, 6 month, yearly close. Kind of see where we're at right before it happens. And then we'll revisit it on the 1st, which is, Sunday into Monday. So Happy New Year. We'll have a New Year's stream. Yep. So Friday and then Monday. Yep. And if I have time in between, I will do a Bitcoin in 60 seconds video. I don't think it's really relevant right now. The one that I have prior from like a week and a half ago is still valid. Still all the same areas. The only thing that has really changed is that, the bands have compressed into the local range. Yeah. Cool. All right. Well, I want to thank you all for hanging out with me today. If you are not subscribed, go ahead and subscribe, and you can come into the chat here. Subscribing, rather, is free, as always. I don't have any paid stuff, so if you have any accounts that you see with my name that are shilling anything, it's not me. I don't have any paid products. I don't have any paid services. I don't have any Telegram groups. So please don't follow that stuff. And yeah, I saw the SDEX broke the all-time high. I'm also, if you remember, I thank you for that one, because I believe you brought that up to someone else, and then they brought it up to me. I believe it was either you had brought it up to Bobby, and then Bobby brought it up to me, and then you had mentioned it on stream a few times. So I'm very happy in that position. But yes, you guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with that, I'll talk to you again in the live stream, and possibly a live stream on Friday, and then possibly the Bitcoin in 60 seconds videos. So take care of yourselves. Have fun. And for Don and those of you overseas, good night.